All right, next we're going to do PQ3-5. So in chapter 2, you recorded the transactions for walk your dog using the basic and expanded accounting equation, but not the account names. So in chapter 2, I skipped this question on purpose just because I wanted to do it in chapter 3 using the account names. So in this specific chapter for the specific question, we're going to record the business activities using the expanded accounting equation and insert account names. So the chart that is provided for you, I've created it on Excel. So let's dive right into it. Transaction number 1, start the business by contributing $100 of your own money to the business. Once again, the business is receiving cash. We know cash out of the 5 main accounts in accounting, or the 5 elements: assets, liability, equity, revenue, or expense. Cash is an asset because it's a future benefit. So in that case, cash is going to go up by $100. And by the same token, owner's capital is also going to go up by $100 because remember, whenever you invest or contribute, so investing and contributing means the exact same thing, it increases your owner's capital. Now, transaction number 2, Walk Your Dog purchases a package of 120 Top Paw Circus scented poop bags from PetSmart for $23.39 plus HST, which is 13%, for a total of $26.45. So this is already calculated for us. If it wasn't, we take the 29.39 times it by bracket 1 plus 0.13, close bracket, to arrive at this answer. The business pays cash for the bags. So we got supplies now because poop bags is considered to be supplies. Remember, supplies is an asset, it's a future benefit to us. So in this case, we're going to increase poop bag supplies for 26.45. And in the question, it specifically says that we paid cash for it, pays cash. So throughout these transactions, I'm going to point you guys towards the keywords. So if we're paying cash for it, then cash is going to decrease. Simple as that. Transaction number 3, Sandra, a neighbor, hires you to immediately walk her dog, Bella. Sandra pays you $15 cash when you return. So just by reading these transactions, just by looking at the company name, your whole service is you walk people's dogs. So that's your main source of income, correct? So this person paid us cash. Cash goes up. So we're going to increase cash by $15. And since we earned our revenue, service revenue also goes up by $15. Transaction number 4, during the walk, Bella required the use of 4 poop bags. The bags cost 22 cents each, so 120 bags for 26.45 is 0.22 each. So all they did in this calculation was they took the 26.45 and divided it by 120 bags to arrive at 0.22 each. And these poop bags were used to help us earn revenues. Remember, the definition of an expense is cost is incurred, used up, or consumed in order to help us earn revenues, because you're never ever going to spend money if it's not going to help you earn revenues. It's pointless at that point, right? So we used up 4 poop bags, and the cost per poop bag is 0.22. So whenever it comes to dollars, it's always good to round it to 2 decimal places. So essentially 4 times 0.22, the cost per poop bag is going to give us 88 cents. So that means that our future benefit of the poop bag supplies is going to decrease by 88 cents. So negative 0.88. And now our expense, remember we used up these poop bags now, is going to increase by 88 cents. Now transaction number 5, to prepare for customers who purchase playtime, you go to your local pet value and purchase a selection of dog toys. So we got 6 toys at $60.95, which includes HST. It's not plus HST, it's including HST. So we don't have to do any calculation. So in this situation, we are going to increase toy supplies by 60.95. It says that we purchased, right? So how else are we going to purchase toys at your local Pet Value? We're going to pay cash. So think about this logically, correct? So that means now our cash is going to decrease by 60.95. Transaction number 6. So this is a big one. So for Walk Your Dog to build a business, you need to advertise. Your mother has agreed to let you use her computer, printer, and paper so you can create a flyer to advertise the services of Walk Your Dog and print up 500 copies. You spend the afternoon delivering the flyers around the neighborhood. Your mother charges you 0.07 per sheet or 7 cents per sheet for a total of $35. You check the cash position of Walk Your Dog. So essentially this over here, $100 minus 26.45 plus 15 minus 60.95 is coming from these transactions right over here. Right, so I already inputted a formula at the bottom to calculate the totals. So the total cash position after transaction number 5 is 27.60, which matches up with this. Unfortunately, Walk Your Dog does not have enough money to pay your mother immediately. She agrees that you can owe her until the business has grown and she won't charge you interest. So in this situation, the first thing that we're going to talk about is advertising. So this whole paragraph is related to advertising expense because we created the flyers. So for instance, if we didn't hand out the flyers, then the flyers will be labeled as an asset. Because remember, that's a future benefit. But since we've actually created them and we distributed them, we're losing value now. We incurred a cost. So that's going to be advertising expense. And that's going to be for $35. So advertising expense is going to be $35. And now since we got a loan from our mom, that gives rise to accounts payable for $35. Since there's no interest attached to it, it's not going to be a bank loan or anything. It's just going to be strictly accounts payable. Transaction number 7, your best friend contributes $100 cash to the business. So now we have another investment into the business of cash. Remember, whenever we have an investment into the business, that's going to be owner's capital. So transaction number 7 is going to be cash $100. And then owner's capital $100. Transaction number 8. 7 customers have their dogs walked once a day for 4 weeks at $15 per walk. This service is only provided on weekdays. Every day you and your friend collect the cash from your customers. So in this situation, we have to do a calculation now. So 7 customers have their dogs walked once a day for 4 weeks. And this is only provided on the weekdays. So I'm going to go back to Excel and do a quick calculation. So 7 customers have their dogs walked once a day for 4 weeks. So we're going to simply do 7 customer times 4 weeks at $15 per walk. And remember, there's 5 days in a weekday because it specifically says it's only provided on weekdays. Monday, Tuesday, Wednesday, Thursday, Friday. So we're going to times this by 5 to arrive at 2,100. And so this is income that we earn now. And every day, cash is collected. Simple as that. So that being said, cash is going to go up by 2,100. And as a result, service revenue is also going to go up by 2,100 as well. All right, transaction number 9. 2 customers have their dogs walked twice a day now for 4 weeks at $15 per week. This service is only provided on weekdays. Cash is collected at the end of every day now. So 2 customers have their dogs walk twice a day. So we're going to do 2 times 2 for 4 weeks at $15 per week. So in this calculation, remember 2 customers times 2 walks a day for 4 weeks times $15 times 5 days now. That's 1200. All right, let's further break down this question for the students who still have difficulties. The number of customers that we have are 2. And remember, we're going to multiply this by the number of walks a day, which is 2. Then we're going to multiply this by the number of weeks this is going on for, which is 4. Then we're going to multiply this by the price per walk, which is 15. Then we're going to multiply this by the number of weekdays in a week, which is 5. So once we multiply all these together, that's going to give us our total value. So 2 customers times 2 walks a day times 4 weeks times $15 per walk times 5 weekdays gives us 1200. So in this case, our cash is going to increase by 1200, and so is our service revenue, 1200. Now, transaction number 10, 3 customers have their dogs walked once a day now, followed by playtime for 15 minutes for 4 weeks at $20 per walk / playtime. This service is only provided on weekdays. Again, cash is collected at the end of every day. So now this calculation is going to change slightly. We're going to do 3 customers times once a day. So just times 1 times 4 weeks times $20 per walk / playtime times 5 weekdays. So once again, let's do it over here. 3 customers times 1. We can even ignore the 1. It doesn't matter, right? Times 4 weeks times $20 times 5. Once again, we got 1200. And they say that cash is collected at the end of every day. So once again, 1200, our cash is going to increase by, and by the same token, service revenues is also going to increase by 1200 because once again, we earned that revenue. So transaction number 11 now. Another big one. So you and your friend are shocked at the number of poop bags that you consume. Approximately 145 bags per week. The remaining top paw scented poop bags are used up quickly. In order to save money, you both agree that the business should purchase 1,000 Bark Plus dog waste poop bags from Amazon.ca for a total cost of $48.55, including, remember, including HST, so we don't have to do any calculation there. Your mother pays for it, and you will repay your back at the end of the month. When the credit card bill arrives, by the end of the month, there are only 428 of the 1,000 bags left. So this one has a lot of different variations to this transaction. So the best way to approach this is to simply just break it down. We're going to break it down into 3 separate transactions. So I'm going to go here, and I'm going to add in a few more lines. Let's first deal with the rest of the bags that were used up. So remember, in transaction number 2, we purchased 26.45 of poop bags. Right over here. Correct? And remember, in transaction number 4, we used up 88 cents worth. So the difference between the 26.45 and the 88 cents, we've used up the rest of those. So let's record that journal entry first. So we're going to do it over here. I'm just going to take the sum of this plus the negative 0.88 to get the difference of 25.57 negative. And remember, The poop bag expense is going to increase by the same amount. So that's going to be a positive number, 25.57. So we dealt with the first part of that transaction. Now we purchase additional bags of 48.55, including HST. And remember, our mom is helping us pay for it. So we're not paying cash for it because our mom pays for it for us, correct? So now our poop bag supplies is going to increase by 48.55 since we have a future obligation now, which is a liability. Our accounts payable increases by 48.55. Now they're saying that out of the 1,000 bags that we bought, only 428 are remaining. Okay, so what we're going to do is we're going to take the 48.55 divided by 1,000 to arrive at the cost per bag. So 48.55 divided by 1,000 equals 0.04855. Now they're saying that by the end of the month, there are only 428 bags left. So we had 1,000 bags. Left were 428. That means we must have used up the difference. Remember, an expense is what we used up or consumed, correct? So we used up 572 bags. In this case, we're going to simply take the amount of bags that we used up and multiply it by the cost per bag. So this gives us 27.77. So now our poop bag supplies is going to decrease by 27.77. And this is also going to increase our expense as well by the same number. So just to go over that again, we bought 1,000 bags at 48.55 and we used up 428. So once again, we have to calculate the cost per bag. $48.55 divided by 1,000 gives us 0.04855 per bag. And since we used up 572, which is the difference between the 1,000 that we had and 428,000 remaining, we're going to take the 572, multiply it by the 0.0488 to arrive at the total expense of 27.77, or the reduction in poop bag supplies of 27.77. All right, now we repay your mother for the $35 loan. Okay. When we repay someone back, we're also going to pay them back in cash. So our cash is going to go down by $35. And now, since this obligation that we had set up over here in transaction number 6, we fulfilled the obligation. Now, that's also going to decrease as well because we no longer have that obligation. That obligation or the liability is going to decrease now because we're eliminating that obligation. Transaction number 13. During the month, 2 of the toys are destroyed by one of the walk/play dogs. You and your friend decide to replace them with better toys that will last longer at a cost of $11.99 each, plus HST for a total cost of $27.10, paying cash. The remaining toys are in good shape and you will continue to use them in the future. So for transaction number 13, it's going to be another 2-part entry. All right, so 2 of the 6 toys that we bought are destroyed. So we're going to go up to transaction number 5. Because remember, we purchased 6 toys at 60.95. So the first part that we have to do is we have to calculate the cost per toy. So we're going to take this 60.95 and divide it by the 6 toys. So I'll do it over here. So 60.95 divided by the 6 toys. The cost per toy is 10.1582. And if you look at this transaction over here, we destroyed 2 of those toys. So simply put, we're going to take this 10 0.1583 times it by 2 toys. The total cost of the toys destroyed is going to be 20.32. Let's just round it up. So is 20.3167 since the third digit is above 5 or more, we're gonna make this into 0.32. If it was 4 or less, it'll be just 0.31. So in this case, we're gonna make it 20.32. So in this situation, the transaction number 13 is gonna impact two different. So we're gonna break down transaction number 13 into two different transactions. First, we're gonna reduce toy supplies by the 20.32. And remember, since we used up these toys or they got destroyed, that gives rise to an expense. So we're going to increase dog toy expense by that same amount. And now they're saying that we bought additional toys for 27.10 paying cash. So now our toy supplies is going to increase by 27.10. And since we pay cash, it's going to be reduced by 27.10. Transaction number 14, your mother's credit card bill arrives and you pay her for the amount owed for the Bark Plus dog waste poop bags. So let's go back to this transaction. So these bags costed us 48.55. So now we're going to pay her off. And remember, we're going to pay her off with cash. Very important. So we're going to reduce cash by 48.55. And now since our liability or obligation or accounts payable is being decreased, we're going to record this as a negative. Transaction number 15, dog waste has become an issue. Neither family wants to waste in their garbage cans. You discuss this with your business partner and decide to buy a garbage can that seals well, locks, and has wheels. So this specific garbage can that we buy costs us $50 plus 6.99 shipping and HSC of 30% for a total cost of 64.40. So the total cost is already calculated for us. We can ignore everything else. Your mother gladly pays for it on her credit card, and at the end of the month, you still owe her as the charge has not as yet come through on her credit card. All dog waste is deposited in the special garbage can, and you put it away every week for pickup at your house. So in this situation, simply put, the garbage can is going to be considered to be equipment to us because it's going to last us for more than 1 year. It's not a supply, it's an actual piece of equipment to us. It's an equipment to the specific business. That makes sense. So our equipment is going to increase by 64.40. 64.40. And since our mother paid for it, we have a future obligation because we didn't pay cash for it. This is also going to increase by 64.40. Now, transaction number 16, after the first week of business, you and your friend decide to open a joint bank account so there are better controls over cash. After looking into checking accounts at the local TD bank, you agreed on a plan with unlimited transactions for $14.95 per month. By the end of the 4 weeks, you have received your bank statement and see that they've charged you the monthly fee and withdrawn it from your bank account. So this over here, once again, is a cost of doing business. It's a cost that you incur in order to help you earn revenues. A bank account is very important, especially with the amount of cash that's coming into the business, correct? You don't want to keep this cash laying around in your house. So you're going to put it into the banking account. Makes sense, right? So that 14.95 is paid out directly from your bank account. So they're withdrawing cash. So your cash would go down by 14.95. And as a result, since this is an expense, bank expense will increase by 14.95. Once again, this is the cost of doing business. It's a cost that you incur, which is the definition of an expense. Number 17 is, at the end of the period, you estimate that you will pay income tax of 70% on the income that you made in the business. And calculate your income before income tax first, then multiply that amount by 17%. That is the amount of payable and the expense. Round your calculation to the nearest dollar. So this is a little bit of a trick question. However, we know enough knowledge to calculate this. So to arrive at income before income tax, or for any amount that you pay in tax in Canada, especially if you're a business, simply put, you pay tax on your revenues less your expenses. So we'll talk about this more later on in chapter 4 as well. So we know that our total revenues is 4515. Now we can easily calculate our total expenses. We're going to take the poop bag expense of 54.22 plus the dog toy expense of 20.32 plus the advertising expense of $35 plus the bank expense of 14.95 to arrive at our total expenses. To calculate the income before tax, we're going to simply take total revenues subtracted by total expenses. Now to arrive at income tax expense, we know that the tax rate is 17%. Remember, 17% is equal to 0.17. To arrive at that, we're going to do 17 divided by 100. There you go. So we're going to simply take the income before tax, and we're going to times it by 0.17 to arrive at $746.39. So once again, to calculate income tax expense, we're going to take the income before tax, which is a product of revenue minus expenses, and we're going to multiply this by the tax rate. So in this situation, income tax expense is the cost that we incur because this money is going out to the government. It's a cost of doing business. There's no way we could avoid this. And since we didn't pay for it today, there's no indication in the question that we paid for it today, right? Because usually tax is paid at a later date. And it even gives you a hint that it's going to be a payable. So that's your second hint. So we're going to now increase our income tax payable because now we have the obligation to pay this out to the government at a future date. I highly suggest that you go through this question again. And the second time you do this question, attempt each transaction before you listen to how I do it. So you kind of test yourself on it.